Moody's just slammed U.S. debt with a downgrade, joining the S&P and Fitch in a historic triple threat. Is the dollar about to tank against the yen, pound, and euro? Well, we're going to check it out in a rare Saturday market update. I got to dive into today's chaos or yesterday's chaos, plus what happened the last time Uncle Sam got downgraded. Buckle up, traders. This is a game changer. We got to pay attention to this. Welcome back, everyone. I'm Tom here from Park Avenue Trading, your chief dealer, keeping you sane in these absolutely insane markets. If you like what you see, smash the like button, hit subscribe, share my videos far and wide. I want to build a huge trading community, and I need you to make that happen. So send this along to your fellow trading buddies. All right, so let's get into this. All right, you know, they put this news out after the market closed. So if we're looking at the S&P 500 here, the last time this occurred, I'm going to be comparing it to dollar yen, because dollar yen is the safe haven. Okay, so that's the currency that's actually going to drive everything forward. Now, we also have to keep in mind, we have to keep watching gold. Okay, so I'm going to go over gold first. Right now, gold appears on the daily to have created a top and a potential double top. But this could be an A, B, C, D correction right now with this news. So gold is going to be the key. If we start to see gold start to rally, it means people are going back into what they deem to be safe haven instruments to protect themselves against inflation and all this chaos. You know, what's going to occur is that now, since we've been downgraded by Moody's, it's going to force U.S. Treasury yields to increase so that they can attract foreign capital. That is not good in the short term for the United States. Now, the long term, we've seen this happen before. You know, downgrade with the S&P back in August of 2011, and then also Fitch basically back in August. Like, what is with August with these guys? August 21 or 23. So the market recovered from it. Now there's different scenarios going on right now. So we have to go over that, because you know, I hate, you know, always, you know, traders always or technicians always say, don't fall into that. It's different this time because. This time, all right, so I'm going to say it, you know, and as a technician, I really shouldn't say it, that it's different this time because. But there is something going on here that's quite different, you know. I mean, the U.S., Trump's tariffs that are going on right now and are projected 134% debt to GDP by 2035 are scarier than before. But in 2011 and 2023, the dollar's reserve status and the Fed credibility were the lifelines. Still, we got yields that are approaching 4.5% right now. And the trade wars are still looming, and we could see more volatility than what happened in 2023, because Fitch actually, it was like just a yawn fest. But let's see if I can let's go over gold first. I know I'm skipping around a little bit, but let's look at gold. All right, so I want to get my little brush here. We have a high here that's created at like 3,500. We have another lower high here that was created at 34.37. We had the low that reacted off of this high coming down here as a support point for the bounce. Now, if the marketplace truly, if gold at the time was truly in an upward trend, it would have used this as a springboard to get above the 500 level, but it didn't. Market came off and has now created this low right here at 3,120. All right, so what is happening in market structure right now? Market structure basically is saying that we got the high, we got a low, we got a lower high, we got a deeper low. This is the critical price right now on the daily for gold. Okay, so Here's our critical price. So if we're going to hold and gold is going to continue, it should hold this low. If it breaks this level, it's a yawn fest for the market, right? Short term. However, if we cannot surpass this low down here at 29, say 50, and the marketplace comes back up through this previous price point here, it could be a potential A, B, C, D correction. So the market could fool us in the beginning by going a little bit lower in gold. Now, why I'm pointing to gold, because gold is the ultimate risk asset for the trading community. Like, big players are going to watch gold to see if they should jump back into gold to hedge themselves because of the U.S. Treasury problems that are occurring. So let's go over to the weekly charts here on dollar yen. All right, so if I go back on dollar yen, I'm rewinding. Okay, on August 5th, 2011, the S&P shocked everyone by cutting the U.S. debt from AAA to AA plus during a nasty debt ceiling fight. Now, the U.S. debt was $14.5 trillion. Deficits were climbing, and Congress was a circus, and as it is today, is still a circus. Those people are feckless. All they know how to do is spend other people's money. They're out of their minds. And now, to quote somebody, the chickens are starting to come home to roost. That's the way it goes. I mean, money is money. Accounting is accounting. The United States is headed towards bankruptcy. Now, the only light at the end of the tunnel is what has been happening with the Trump trade deals. He's bringing a tremendous amount of investment back to the United States, but it is a shock to the system. That's why if you're trading crypto, you should also look at Bitcoin, because Bitcoin, if it takes a dip on this, it would be a great, in my opinion, buying opportunity, because Bitcoin is now totally unrelated to these standard financial markets. These standard financial markets are starting to become dinosaurs. And, of course, there's still going to be trading in it, but, I'm looking at this marketplace with really some disdain, really. I really am. So back in 2011, after the announcement, okay, dollar yen went down and stayed down. It went down from, say, 81 and a half. It traded down to 75 and a half, 600 points. And it stood in a consolidation for, 31 weeks. 31 weeks it stood in a consolidation. So if history is any judge, we could be saying that dollar yen is heading lower, and it's going to be breaking support levels and going back down to 139, 138, 137, and it could sit there for a while. So this is pure conjecture right now, but I'm going to be doing the weekly overview tomorrow. I didn't really expect to be doing this type of video today because, Saturday, man, I want to take a break, smoke my cigars, and hang out a little bit and put up, an educational video. But this is too important just to not go over. So we had a 31-week consolidation back in 2011. So the dollar, got crushed against the yen. It dropped from the 81 to the 75 level. It was a 5% slide. Why? Well, global markets were panicking. But however, there was a Eurozone crisis. Stocks sold off and the yen soaked up safe haven flows. So Japan, the Bank of Japan, even intervened at this point. There was heavy intervention to basically stop the yen from appreciating that much. So overall, the sterling dollar, it gained a little bit. It went from... Actually, it came off a little bit. It came off from 163, 155, but the UK austerity kept it in check. So the big lesson is the dollar took a short-term hit, but its reserve currency status saved it in the long term. Now, by 2012, the markets moved on and the yen started to lose its luster and it started climbing back with Abenomics, you could say at the time. Remember the prime minister of Japan, Abe? So the marketplace, recovered. Great. So now what are we looking at when we fast forward to August of 2023? Let's get over there as fast as I can. Actually, I'll put this on pause and get there. So we're fast forwarding to August 2023. Now, Fitch joined the S&P, dropping the U.S. debt from AA+ after another debt ceiling drama. Debt at the time was $32.8 trillion. Debt to GDP at 120%. Markets, the dollar yen barely blinked. It kept its upward movement until it hit resistance at a technical level of 152. And then the market came off and it traded down to 139. Okay, so and in the beginning, the dollar yen really didn't do much. It actually it fooled everybody, climbed a little bit higher up to this top level right here, 152. Came right to the resistance and then dropped a good amount to 139, let's say 140. So what, 12 big figures. 12 big figures down, okay? U.S. Treasury yields at the time hit 4.8, pulling in cash from other countries because they had to, they were reacting to the downgrade, so they have to go up in yield. And Japan's ultra-loose monetary policy in this section kept the yen kind of weak. Now the lesson here is yields and economic strength trumped the downgrade for the time being, but the market did react. It did react. It didn't react at first. It did react. It came off 12 big figures, and then it started running again because of the loose policy of Japan. So what's different now as we zoom over to now? And I want to check out the S&P, all right? If I'm comparing the S&P to the yen, all right, let's go to a line chart, okay? And let's make this, we'll keep that the same. We'll keep it as bars. Right now, as we could see, like the S&P, this was 2023, okay? The S&P took a nosedive back then. All right. It sold off I think 15% at the time. Dollar yen also reacted, okay, late, but it did react. And it went down from the high of 151. That's that, 139 that we saw, 140 level that we saw. Now, what's happening today? Well, the market hasn't opened yet. But when this thing opens, we can expect this market to come off pretty deep. First time it happened, it slid about 6%. This time, it could be nasty. It could be really nasty. So in the short term, we're going to expect extreme volatility here. So that, these are the points that we have to pay attention to. Now, right now, what's different now? Well, Moody's downgrade makes it a 3 for 3 at a AAA+, raising the stakes. Trump's tariffs, okay, they're not helping the situation. But they're necessary because they are pulling in investment, and it's working. But in the short term, we're going to see some volatility, which is fantastic for us. But we just have to be on the toes of what happened in the past, like I just went over. Okay, so there's a projected 134% debt to GDP, again, like I said, by 2035. This is scarier than before. So, but like 2011 and 23, the dollar's reserve status and the Fed credibility are the lifelines. Now, maybe this is why Powell didn't cut rates. Because we talked about this before in previous videos. We talked about, US M2 is the highest. It's extremely high. They injected so much liquidity in the system for COVID that there was no real need to cut rates. The money is out there. We need economic activity to start to get the velocity of money going. Now, once the velocity of money starts going, then there's no need to cut rates because the velocity of money flying with economic activity is going to be inflationary in nature. So it's this double-edged sword here. There's compounding effects here. However, dollar yen right now, if we look at it, okay, we saw, let me go to, let me see, do I have another chart here for dollar yen? That's 1 hour. What do I got here? I got a 4-hour chart. Okay. I want to go back to this one. Sorry. All right, because I have the pin bar there, and I want to go to 6 hours. Let's go to 6 hours. These are all the weekly levels I had up. I got to adjust these tomorrow. But as it stands right now, we could not get above the 149.20. With this news, I'm assuming that dollar yen is going to, in the short term, could potentially break 144. If it breaks 144, it's opening up a path to 142, 143. 143, okay, it's 100 points. So we're taking it one step at a time. We broke out of this channel right here. Let me get to my brush. We were in a downward channel, which is actually bullish in nature once the breakout occurs. We came up, we could not sustain the rally. So I'm believing dollar yen is going to push down to the 143 level and potentially even 141. The main point was that 139 way back when. That's where it hit. So we have a potential to do that. All right. So I'm going to be going over the weekly analysis. I haven't done it yet. I have to get better points than, what I'm giving you right here. But these points are still good. They're not that they're not. But this Moody's stuff, man, it didn't help out the situation for the U.S. dollar and the U.S. economy at this time. However, it's going to rock the Forex world, which is fine with me because that means just more volatility. Dollar yen has been quiet the last couple of days. Now, I have a long dollar yen position on. I told you guys about it Friday. It's going to get stopped out, no doubt, but it'll be stopped out at, a little bit less than entry. So, that's just part of the game. But so the trading book, like what should we do here? Really, you got to wait till I'll give more points tomorrow. So here's the synopsis, okay? The downgrade is tilting toward yen strength. If the dollar yen breaks below this 144, it's going to go lower. Now, we have to watch in Japan's inflation data and Bank of Japan chatter for catalyst. If U.S. yields keep climbing, okay, and the yen, the Bank of Japan does nothing, we could get the spike down and then the rally again. So we got a lot of things going. Now, sterling dollar. The pair is glued right now between, say, where are we in cable? Let's go over the cable. I'll do a quick cable look. It's really stuck between 132, the figure, and 133.32 right now. If I go to a 6 hour, let's go to a 6 hour in cable. Okay, here we are in cable. All right, so we could actually say we could expand it out. We can go, say, 130, 139, that recent low that we had, and the 134. That's the wide range of cable. All right, so I think cable is going to really be a nothing burger. It's all going to be dollar yen, and that's going to run the sterling yen and the euro yen. The euro dollar is another one that's kind of in some trouble. Let's see, euro. Let's see, do I have a euro dollar chart? Yeah, here's euro dollar. Euro dollar, I told you we had that box going. We broke below it. We hit targets right here. We haven't hit 111.06 yet. So again, come over to my weekly analysis. I'll go over that. I had the trade call here for you guys. I said if it broke this, we were heading down to 111.10. We got down to 111.30 so far. But this whole damn Moody's thing has thrown everything into turmoil. All right, so please come on over and make sure that you watch my weekly outlook. I look forward to updating you on that, and we're going to be able to see what happens with the futures market on the open. We're going to be paying attention to the Asia Open. That's going to be critical here. and gold. So make sure you watch gold. Make sure you watch the Asian market. You know, this market's going to be wild. Don't do anything emotionally. Make sure you pick your points and, you know, trade with your head, not over it. So if this breakdown's got you pumped, smash the like button, hit subscribe, ring the bell so you never miss a video. Drop a comment below. Are you shorting the dollar yen? Are you riding? You know, are you sitting in this one out? Let's build this trading community into a powerhouse. Share the video with your trading buddies, and also you can always go over to Park Avenue Trading, get yourself a free ebook on price breakouts. Look forward to seeing you in the next video. Cheers.